The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome, traders and traderettes. This is David White and the Power Trading Hour coming to you each trading day between 2 and 3 Eastern Time on the station for technical trading and investing, TFNN.com. So we've got an interesting day coming to you here. A nice bounce out of here in the markets, at least in the S&P, up 12.5 points on very light volume. In fact, probably between 10 and 11:30, probably the lightest volume of the year. It picked up a little bit as it pushed higher. But we've got markets headed what I think are a blow-off top, and we're going to look at some of the stocks today that do that. First, we're going to get into the news, and probably at least what everybody is saying the reason for the nice little pop today was David Tepper. He is a big hedge fund trader, investment manager on Wall Street. He's been right for a while, probably a good trader. And he came out and said, almost Khrushchev-like, the shorts will be buried. And I watched him cringe, and he actually said the same thing this morning, and he says, I hate that I said that. Almost always, any kind of time that I say that there's 100% chance of anything happening, markets normally go the opposite way. But he kind of, the markets were down on the futures. He bloviated about how the markets could only go up no matter what the Fed did. And, of course, everybody's all over that. My guess is that he's busy selling, and we're going to look at some other stocks that we're probably shouldn't be listening to the people that are bloviating about what they let me put it this way. Just I don't know why it's not out-and-out fraud, but boy, the more I go through this market, the more it is starting to remind me of the dot-com bubble, and we're going to relive one of those today. But kind of interesting, you know, yesterday we talked a little bit about the IRS, and we found out that the government had gone and gotten every phone call from the AP over the last 2 months. Rather far-reaching as far as I can tell, and it seems like the hunger for government to know everything about everybody and use a shotgun instead of a rifle to look for people who are leaking information seems more and more Big Brother-ish every day. Of course, we found out that I forget the gal's name on Friday that basically dropped the chalupa about the IRS, basically lied about everything she said, and we were finding out about that from the Washington Post today, that it wasn't just an issue with the IRS agents in Cincinnati. It came from Washington, and you know, it's this. I have a feeling is going to get a lot bigger. Of course, this week is the 40th anniversary of the blow up of Watergate, and some people are making parallels to it. I don't suspect that we're going to find this goes all the way to the top. I do suspect that when you hire people that are ultra partisan, it is going to be interesting. I think probably the reason that it relates to the market is going to be how it affects not the housing, but the health care, and how that rolls over in the next few months. Healthcare stocks have been incredibly strong, and I don't know if this is I'm trying to figure out how this is going to relate back in, because, of course, IRS is going to be collecting all the money for health care going forward, starting in 2014. I think they're already starting now, but there's going to be a lot of enforcements, and I'm wondering how much this is going to goo up the whole operation. We've seen over the last couple of years, Bart Chilton was on my show early on telling me that how quickly they were going to get all the rules and regulations for Dodd-Frank through. And I think at that time he was saying 6 months. It's been a good 2 years later, and of the regulations are supposed to go through, I think they're still stuck at 125 out of the 250. A lot of these big sweeping changes can be derailed easily with this kind of stuff. I haven't seen a whole lot. It still looks like the healthcare stocks are fairly strong, and it's kind of interesting. I would not think that. Other things in the market today, some of the when we're talking about healthcare is angina. Angela Jolie had cancer surgery, or at least preemptive cancer surgery, and put a little bit of juice into a lot of these DNA and DNA sequencing stocks. She found out that there was an 87% chance that she would have cancer because of a faulty gene. And we're probably going to see a lot more of this. But again, back in that healthcare sector, she had a preventive surgery when she found out that there was an 87% chance she was going to have the same breast cancer that her mother had. And to tell you the truth, if there was a 13% chance, I'd probably go to the doctor every day and get tested rather than get surgery. But I don't know, maybe she watched someone slowly die, and maybe she just thought that was a better option than not. But the DNA sequencing, a lot of those stocks were popping earlier in the day. I haven't looked at them lately, but kind of what we're looking at. Probably the news of the day that I'm going to put the spotlight on is Tesla. I talked about it on the show, on the Tom O'Brien show, and on this show a few times. What we do know is that where the stock opened up this morning, hit a high of $97.12, that it would have to be selling 250,000 cars a year at the same profit margins that they are making now. There are two real big problems with that. One, it is a $75,000 car that is for sale in just a few states. Most of the other states will not allow them to sell the car without a dealer presence. This goes back to the early days of the car business where companies were going in and out of business all the time. These laws have persisted. Maybe you could make a case that they shouldn't exist anymore, but even I think North Carolina was passing a bill today, basically especially going after Tesla's model, selling online and keeping all the profits. So that is one part of it. My guess is that all the other car dealers are going to gang up on the local, well, at least the states that are not enforcing this and come after them. We do have a phone call today, and it is from David in Hawaii. How are you doing today, David?
It's Jason from Hawaii.
Oh, Jason. He put David down here. Okay. Go ahead.
I want to ask about your software, the Art of Trading. You say you look for patterns, right? Can we do the opposite? Like if I put in a bigger symbol into the program, will it tell me what pattern does it fit, like the ABC or the Garvey pattern?
Yeah, what stock are you interested in?
Oh, I'm just thinking about the EWJ. That's
EWJ?
Yeah, that's the exchange fund for Japan.
Okay.
They are printing money right now, so
yeah.
just going straight up.
Well, if you're watching it on Tiger TV right now, you're going to see that not only is it doing retracement, but it's showing you most likely where support and resistance would be in confluence, and it does it automatically. What you want to look for in this, let me come back, is a two Fibonacci retracement levels. In this case, if you're just looking at the $10.37 move to the $12.02 move, if you're watching on Tiger TV right now or in the den, you're going to see that it instantly puts 3 ticks along the side. That's going to be the 381, the 0.50, and the 618 retracement levels. The other thing you're going to notice is there's 2 Fibonacci retracements set up in here, and if you go between the 618 of one and the 382 of the next one of Fibonacci, you're going to have a thing called confluence. That's showing in the blue box. I've got the mouse hovering over at the meantime. The other thing are expansions, and if we click on that real quick, you'll probably find out that there's nothing in here for expansions. You really don't have a significant ABC in the EWJ yet. So what you're going to be looking for mostly is just that. Probably a retracement from the first April 1st low at 1037 to the 1202 today, which was the high. And you could look at the previous pullbacks, but even if you look at the absolute low from June 1st of 2012 last year to the high up here, a 50% retracement, which would not be much of anything in this market, would be $10.33. You've got that previous low out here at $10.37. So that would probably be the next area of 50% retracements. And you're probably going to see that this gap that occurred on the 4th of April, that gapped up on 46.7 million shares, comes right in where the confluence level is. So that's probably a likely support. 50% retracement, it's going to be somewhere in the mid, probably $10 level.
Okay. Is there any, I like the ABC pattern because it's very good and, hello?
Yeah, go ahead.
Yeah, like ABC, like you talk about the Caterpillar and IBM.
Yeah. There's just no ABC pattern in this. There's not significant enough retracement from the March 27th high to the April 1st to give you an ABC. So really you just have kind of a trend that had a hiccup in it, but it's continued to go up. Oh, we're going to be back in just a minute if you can hold.
Okay. Yeah.
Okay.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We come back. Don't know. Is Jason still on the line?
Yeah, I'm still here.
Okay. Did you have any follow-ups to that?
Well, the ABC pattern you mentioned before the IBM and the Caterpillar, and as far as Apple too, I find it very much more easier to follow. So as far as your software, they would kind of scan all the stocks that you input overnight for ABC, and then we can, for a subscriber to look at it and see if it fits.
Yeah, unfortunately, at this time, not. Maybe someday in the future. Right now, we're pretty much concentrating on Gartley's, but it does do automatic expansions and retracements. And you can look at that. The ABC patterns are there. And you can, if you have a lot more questions, there's lots of videos on the website. You might want to go through them and see what it actually does. But they're pretty short and sweet. And get to the point. They'll give you a much better idea than I can just explain over the telephone.
Yeah. Well, thank you very much for explaining that and the EWJ.
Yeah. I mean, if you want to look at ABCs, IBM is probably a good one out here. I hadn't checked on CAT yet today and take a look at that, but pretty similar stuff. If I can get
test that low that they made 2 weeks ago.
Yeah.
And then we'll see what it does there.
Well, we'll get to it in a minute. Anyway, thanks for the call.
Okay.
And
thank you very much.
You bet.
Have a good day. Bye.
Yeah, let's see what I've got going on here. Probably too many things, actually. Let me go on real quick. Unfortunately, some of the stuff we use does not always work exactly the way we want it to. I'm going to go back and try again here. Just give me a second. I'm having technical difficulties. We'll be with it in just a second. I wanted to talk about Tesla. TSLA. I'm going to write down CAT. Anyway, if we want to get something that has a dark cloud cover, there's probably not a better example of super high volume blow-off tops as we're going to see in this. And I said earlier that most of this market reminded me extremely of the .com blow-off top, except it lasted about, probably a good 9 months. But we had stocks acting like this almost every day out there. There were probably 4 or 5. A lot of them were brand new IPOs, so you didn't have a lot to base technicals off of in the marketplace. What you did have is probably the exact same thing that we had in Tesla overnight. This thing gapped up on earnings and moved fairly strongly. We had 2 major gap ups. It had about 46% short interest. Bloomberg is reporting that that's down to about 20 over the last few days. Almost everybody that was short has gone ahead and covered. What you did have last night is right close to the closing bell. It looked to me as Morgan Stanley decided that they were going to run the stock at least one more day. They came out with some very, I'm going to just call it out and out, almost, I don't know, since I don't know what's in their brain. They could be stupid, but they had to be one or two things. Either they're stupid or liars. I think probably on the second part of this. They came up with some hokum that did not pass the smell test about how this was going to $103. It was a new target. And, of course, instantly started juicing the stock in after hours last night. This was pretty much to wipe out any of the last remaining shorts in this stock. It's trading out at $82.50 after being up to $97.12. This was the kind of games that they were playing almost all the time, and we'll probably get into more of these stocks. Netflix is another one. None of these stand the smell test when you look at them. Again, when I was talking earlier, they are selling about 20,000 cars a year right now. They would have to sell 200,000 cars a year. The question of whether or not they're going to be able to sell 200,000 electric cars, probably not easy. Now, it would be nice if they could just sell 200,000 cars with what they have. That isn't going to work. We're going to break here. I'm going to go back and start talking about building new factories, having dealers, and some of the other issues that they have. Be back in just a second.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
As we come back, we continue watching the market out here. Like I said, probably one of the quietest days in volume till about noon out here. Very quiet, and we've got even now 2.4 billion shares is not anything to write home about on a move like this. We are up 13 points on the S&P cash, and in this range, we probably should see a lot of volume coming back in, and we have more than a few stocks that look like they are making some blow-off tops. And if you want to make some decent money out here, or at least quick money, if you study a stock like Tesla in these kind of markets and watch it trade intraday, it's something to behold, but it's also one of the best intraday trading that you'll probably ever have. And these things tend to have nice, huge intraday trends that continue on, especially into the close. Tesla's printing at $85. Thanks. They're at about $2 in every 5 minutes. But what you have is exactly what you like in a short is some kind of giant sign of capitulation on the shorts, and as soon as they are gone, the stock starts to come back to probably some kind of median price, or at least back to an average of what it's probably worth. My back of the envelope probably says that even in the most aggressive pricing of this company, it's worth maybe about $35 a share. And keep an eye on this thing. Usually companies, well, say like Netflix was run by Icon. There is going to be somebody behind this. In this case, really looks like Morgan Stanley has their fingers all over this one. It is not uncommon, but certainly one of these stocks where you can see the kind of blow-off tops that occur in, intraday moves that are rather staggering. The question is whether or not we're going to hold up here by the end of the day and how we close. If we do continue to close up here higher, I would suspect that we might see the exact same kind of movement in the markets that we see in Tesla here. We could have 100, 200 point runs in the S&P cash, and basically a exuberance or irrational exuberance that chased this market all the way up to a high and cataclysmic at that point. In fact, probably one of these days I'll go through the dot-com bubble, but just remember to see the NASDAQ move and the huge move in it for stocks that had no business plan, that had no money, but were able to go public. Pets.com is always a good one to go back and refer to. But right now we're probably around a 12 PE over the S&P 500. When I talked about the big guy of the Wall Street, David Tepper, this morning, said that he thought it was going to go to 20, which is interesting. But my guess is, do you really want to be buying stocks at a 20 PE when historically you win 10, 12? The question is just how big this bubble will be. Can Bernanke actually throw any cold water on it? My guess is that he has failed, and we'll probably have to go do more aggressive techniques to keep the market from not melting up, but exploding. We are at a crossroads where you're going to see this kind of movement in the stock markets. And, we could see 20, 30, 40, 50-point days in the S&P in the kind of exuberance that happens at the end of markets. Let me put it that way. But, probably the most interesting thing here is the extensive light volume. Still haven't cracked 2.5 billion shares on the consolidated New York Stock Exchange today. But we've seen the actual short interest in S&P stocks come down to pretty much an all-time low. If you're not in the S&P, a lot of these stocks, like Tesla, some of these other ones, tend to have outrageously high short interest rates. In fact, now it's running up back in the $86 range. But, what are you going to do with these particular stocks that have no fundamental value underneath them? It is a house of cards, and you have to watch out. But intraday trading can be absolutely fantastic in these, and I would limit it to these stocks to intraday trading at this time. I'm more of a swing trader, but this goes back to the early days of my trading career where this is all you had. There was no way to swing trade a stock in the marketplace because basically they were moving 20, 30% per day and almost no way to go back and figure out anything other than 5-minute charts, and even then you were probably getting stopped out too quickly. But a good way to look at the stocks and remember what markets look like that are in the throes of a huge bubble. But Tesla, especially the intraday chart of this thing, if you're really wanting to know what fast markets look like when they happen every single day, this is it, and what an excellent example. I wanted to get into some other stocks and see how they were doing today that aren't so vicious. Probably the first one is ADM. Looking at some of these things and seeing them roll over a little bit. What I've been looking at in Archer, Daniels, Midland, ADM was 3 successive highs on a lighter volume. You had the February 19th high at 33.10 at 7.3 million shares. Just a slightly lower volume on April 2nd, but it did pull back into the trading range, and 5.1 million shares on May 9th. This thing's making a little hammer candle on the lighter volume out here today. But a lot of these look like they are hitting some fairly strong resistance levels in the marketplace. And we'll have to see how those are moving out. GPC, another one out here, seeing how it's coming up. We've been talking about this one for a little while. Genuine Parts Company's GPC testing its big high of April 3rd, $78.27, 890,000 shares. And we're looking at about 262,000 so far today. It did have, what did it have? Yeah, it's been pretty light back in these levels. So, I mean, the best you could say, let me see if I can find it out here. 611, 66. Yeah, it's going to be one of these out here. There it is. 658,000 shares on the 9th was a strong day, and that was actually kind of still not breaking that previous high out here. But we have done it today. See whether this closes above that $78.27 and whether the volume remains as light as it is so far today. So what else do we have that I wanted to be taking a look at? Zinc. We've seen copper being extremely weak, and it's bounced a little here over the last, I guess, since the 1st of March or 1st of May out here a little bit. Let's see if I have a quote on copper for the last few minutes. Is it up here? I don't think I have it on my chart right now. So look at it. We do have a silver off 32 cents. Gold's off $9.90. But I don't. For some reason, I don't see the tick on copper here. I'll try to catch it during the next break and see what we can see. Horsell Holdings Company, zinc, which is of course a zinc company. This thing went and broke through its high, $11.69 yesterday. 350,000 shares going up against its previous high, which was the March 8th high, with 560,000 shares. So a couple 100,000 shares light, pulled back and even pulling back a little bit more. So continuing to see real pushes in technology stocks, like car companies like Tesla, and LinkedIn's up about $8 today. We're seeing a lot of this, which is just huge moves during expiration week, and we'll see if this can hold. Still up 13.5 points on the S&P cash. Volume is still at a crawl, 2.5 billion shares. Urban Outfitters is another one. It's up here testing its highs. This one was very, very light volume compared to the last spike up here, which is February 7th with 4.2 million shares at $44.15. Went over it yesterday on, 16 cents, 1.3 million shares. This thing's pushing up again today, 1 million shares. Certainly doesn't look like it's got a lot of push back, and there's some nice gaps around this area and some previous high-volume lows. What you would probably want to be looking at this one for is this high-volume low where it exceeded on April 1st, exceeded the February 26th low. So it broke below it, higher volume, still looks like that $38.19 low is active. State Street Corporation, SST, some of these financial stocks are breaking out, but we're looking for volume on them too. I'm looking for 6.3 million shares, which was the highest volume within 0.5% of the March 20th high, $60.65. We are blowing through that today, but so far about 50% of the volume. Other ones out here that we're looking at, Parametric Sound, PAMT, another one, much lighter volume stock out here, but what's interested me is three very light volume dojis approaching the previous April the 3rd high of $21.99. 460,000 shares. You basically had 150,000 yesterday and 100,000 so far today. And three nice little dojis out here. This thing looks like it can go back to around the 1452 low if it fails up here. HLSS, which is Home Loan Servicing Solutions, it still hasn't tested its high. Thought maybe we might get a test of that high. It's going up against the March 15th high of this year, $24.09, 1.1 million shares. We've had 343,000 yesterday, 326,000 today, probably going to come in line with that. So a lot of these stocks are right at these particular highs without much of volume so far, but that's the broad market too. GenCorp, GY is the symbol on this one. Another very light test of a previous high. We're going into the April 4th high at $13.87, 1.9 million shares. And what do we've got here last few days? 370,000, 330,000, and we're probably going to end up with something like that today. We have gone above that previous high today, and it looks like we're going to close below it. So we probably have a decent sell signal. Genuine Parts, we talked about this one a little bit. Going to watch this very closely into the close, and ANF, and then we're probably going to get into some Gartley patterns here in a minute. At Crombie and Fitch, of course, we were talking about the Urban Outfitters. Kind of the same thing here, except this one's got a huge gap with high volume that this thing's running into right now. The last major high out here before it fell apart was on February 20th with 2.7 million shares. Over the last few days, 1.9 and 2 million shares, 1.2 million shares, 1.2 million shares, and probably going to get maybe just a hair more today. But again, we need to watch and see if this can close below the 52.44 to get a confirmed sell signal. You have some decent volume, but what still has not been tested out here is the low volume, the high volume low at 44.35 from February 26th. So we're going to continue to see some of this. I wanted to look at a few of the Gartleys out here. And let me see. I had a list out here. Where's it at? I had one that I kind of was working with earlier. There it is. We're going to look at a few Gartley patterns and see how they've played out here today. Centene Corporation, I think maybe we brought this up yesterday. And this thing looks like it's gone above its range. Crocs was another one I think we brought up yesterday. We're going to see this one. Another one that's broken the high. Again, the volume energy on this last one, probably not too big. We're going to go look at Dillard's now. Again, now we've got three of these retailer clothes companies looking interesting. This one's probably one of the better ones of the bunch we've been bringing up in Gartley's. It's come back up on a very light volume. Still have that high volume low out at the 8 point, which was 2.6 million shares at $75.33. We'll be back and start wrapping up a few more of these Gartleys before the end of the show.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Wanted to bring up a QGen before we finish the show today, just because it's kind of an interesting Gartley pattern out here. The X to A may be a little long, and the compared to the A to B a little long. This thing set up at C to D rather quickly. But sometimes it just doesn't matter. I'm more interested in the extended C to D legs that take a lot of time. It seems to me like that's a lot more important than the extended A or X to AA and A to B legs being rather extensive. This one is a very good one to look at because why the first two legs are stretched a little bit. This one had pretty much what you were looking for in a Gartley pattern, and that is a good symmetry, at least in the price action. You had a basically a retrace of around 50% on several of the legs, and 80% from the X to A. And, you're looking probably for a 78% retracement on that. Your target was $18.56. It got down just about, a few cents lower than that, $18.47. And, you did gap down with some decent volume, but then the volume kind of dried up for a few days out here, hit your target, and you got a little bounce out of it today. Other than the gap down probably being resistance level, not a bad pattern out here. I'm not real a big fan of trading these with gaps in them. especially with gaps with volume coming up. But not a bad-looking pattern out here in the market. And let's see how much time I got left. 2 minutes. Wanted to look at WGO also. So we'll be bringing that up here in just a second. I'm having internet problems, but we'll see whether or not that continues here today. Unfortunately, it looks like it's going to. So we'll have to figure that out. Yeah. Anyway, there it comes. I paid for the FiOS upgrade to get super high speed, so I could do the show occasionally here from home. Anyway, Winnebago Industries, another one looking fairly close, very close to its target of $20.60 for its D target. Energy is off about 30% on the way back up. It's got a perfect AB to CD ratio. When we're looking for symmetry out here, it is a 1-to-1, although the time frame is a little different. So you've got pretty much everything what you're looking at here in Winnebago. Maybe they're thinking that fuel prices are going to go back up again, or maybe interest rates, but not a bad-looking pattern. This is, some of the things out of the art of timing the trade charts. And getting a comment from the den about my mileage may vary for Internet speeds. It's been incredibly good. I just had a kind of an issue the last half a day or so. Again, and just look at this one as if you're trying to get them. And again, you can always get a money-back guarantee on Art of the Charts. Go to the front page of TFNN. You can get all these Gartley patterns I looked at today on the show. The night before, normally somewhere around 8 o'clock or earlier, we'll have these charts out there and available for you to download. Just in the last minute here, for those that listen to my show on a daily basis, you know how I rail against the horrible disco music sometimes played by our engineers. I wanted to let you know that I'm on Spotify, and if you want the music I look for, there's 1,000 songs better than disco for a playlist, and you can find that, and maybe you'll email me songs you'd like to add to my list so that we can play during the breaks. We'll see you all tomorrow.